the 31st of March 2026. You're listening to the Mid-Morning Report. My name is Wumba Sameta. We're getting to our topic of conversation this morning, and of course with my guest this morning I have been joined by Mr. Kelvin Chisanga, who is an economist. Our topic of conversation is the impact of the fuel situation on Zambia's economy. Now, of course, as of 31st March 2026, today we do expect the Energy Regulation Board to review fuel pump prices today, and of course the current prices petrol are 26 kwacha 0.61 ngwe per liter, while diesel is at 23 kwacha and of course 25 ngwe per liter. Kerosene is at 21 kwacha 0.06 ngwe per liter. Jet A1 is at 22 kwacha 39 ngwe per liter. Now, of course, the previous review in February 2026 led to a reduction in fuel prices driven by the appreciation of the kwacha against the US dollar. Now, currently, Zambia is experiencing an erratic fuel supply with reports of diesel shortage hitting Lusaka and other parts of the country. The Energy Regulation Board has assured the nation that diesel supply remains stable, with 5 million liters of diesel uplifted from Ondola fuel terminals and in transit to different destinations. However, the situation is causing concern, with transport operators reporting delays and disruptions and motorists facing long queues at filling stations. Now, President Hakainde Hichilema has ordered a nationwide investigation into fuel shortages, warning that deliberate interference in the supply chain will be treated as economic sabotage. Like I did mention, we do have an economist this morning to let us know how this will impact the nation on the economy side. And of course, later on, if you would want to come through with your questions or contributions, I will be able to open the phone lines and of course give you a chance to talk to Mr. Chisanga. Good morning. This morning, rather. Mr. Chisanga, good morning, and thank you so much for making time.
Thank you so much, and good morning, dear listeners.
How are you?
I'm good. I don't know how you're doing as well.
I am well, thank you so much.
Fantastic. Good to be here.
All right. Now, of course, Mr. Chisanga, like I did mention that today we should anticipate that ARB will be reviewing the fuel, prices, and of course, when on the ground is that looking at the situation that is happening in the Middle East, there is a chance of an increase, and of course, the country should prepare for that. First and foremost, what factors will the ARB consider when reviewing fuel prices today?
Okay, we understand pretty very well that there are two fundamental factors that are basically interpolated into fuel cost structures, especially when it comes to petrol and diesel factors from there. What we understand pretty very well that whenever we're trying to work with the price margin for the coming month, we basically look at the global international market pricing, and again we also look at the forex market performance patterns. So definitely with the work of what has actually been able to happen, where the global pricing structure is something that is causing some bit of concerning situation here, we are likely to see the upward adjustment on the fuel products. And much to this also is that there is an unexpected aspiration to see that we continue with the security supply of this commodity. Maybe just to attest the issue of deficit that we are facing on diesel, it's coming from that background to say that there is a likelihood of an increment which will take place in the market today.
Okay. Now, with that explanation, how will the potential fuel price increase impact Zambian consumers and businesses?
We understand pretty very well that the moment you touch on fuel, you are also touching on many other factors in terms of triggering price growth, especially when it comes to essential goods that we buy at household level, and also it gets widely on the business side as well, meaning your fuel cost center for your pool cars, your movement, or any other mobility will get to be affected. Much more when you look at it from the broader perspective of business, you're also triggering operational costs in terms of production and many other aspects. And in the end now, when you look at the the country's level of economic structure, we're talking of inflation, which is being triggered, which will be able now to cascade wide as well into the whole scenario.
Okay.
Yes.
Now, of course, talking about many other issues that this will, affect the economy. The government has also, introduced the 24-hour economy, and the question of how crucial it is for the energy sector to remain stable becomes, a center or essential to its success. Now, a reliable and uninterrupted power supply is essential, Mr. Tsanga, for the 24-hour economy to function effectively, supporting continuous business operations. What is government supposed to do at this particular moment in time to make sure that, the implementation go accordingly?
Okay, so we need to typically work into energy reservoirs, ensuring that we have the best way we can store this commodity for a longer period to actually even make business sense, especially when it comes to turning around business cycles. Then again, we need also to look at the policy moderating factors to ensure that we have some flexible, supply system in the industry as well. Then there is a need also for us to see how best we can basically play out with of course, the oil marketing companies to ensure that they have a steady supply, meaning they need to stock enough commodities so that they should be able to meet the demanding nature. And much to this, I think it's important to look at it in a wider perspective to see that we double the size of what we import, especially when it comes to allocation or quotas of some sort. If there is something like that under the ERB, there must be also some sense of predictable supply in terms of what we're trying to do. Then we should just maybe look into it critically. I think the energy sector in totality, even when you look at the electricity side, it's important that we need to find some stable supply so that we can support the policies, direction of 24-hour economy. Otherwise, continuous production or productivity won't be able to be sustained from that basis.
Okay.
Yes.
Now, coming from an economist point of view, Mr. Tsanga, is the country ready for a 24-hour economy?
Well, I think the police has set a tone, and also there are sectors that are actually able to perform almost around the clock in terms of operation. Maybe I can also just tell you to say that the media is still working on a 24-hour economy. We are talking of the medical and healthy sector also to be performing some work from there. Then security services who are being offered on 24-hour point of reference. So I think it's just that we just need to look at how best we can work with the entire security integrity in terms of trying to embrace that model of operation. But by and large, I think Zambia is gravitating to that modernity system, which we should be able to see that we basically work out key fundamentals from that perspective, because it's at a point when we need to double the size of economic growth potential, and also matching with the growing demand of population growth, which is standing at 3.4 somewhere there per annum. Much to this also, I should be able to mention that Zambia's deficit in terms of budget implementation aspect and requirement demands that we need to look at best where we can deeper into some of these activities in regards to key economic fundamentals. So it's a light time. Maybe yes, it can actually have some bit of drag here and there, but there are also economic investors who should be able to see this as a great opportunity, because we're not just basically investing more, we're just basically using what we have. Just like in the case, maybe I can cite example here, when you're working during the day here, you just basically use the resources that we have here, the building and everything else, the same personnel and all that. So now imagine you flip the coin, you're going to use the same facilities that you normally use during the day. So we're just basically getting to that economics of going beyond daylight sort of activities, and something that will be able to also help change the narrative in terms of working culture. For example, you've got students at UNZA who are basically doing mass communication. They can come and work in the night up to a certain period of time. During the day, they're in school. So it just basically helps to change the narrative and the thinking pattern that we have as Zambians from that perspective. It's something that's very important.
Okay, yes. All right, thank you. Now, getting to know the current situation or feel in the country, Mr. Notisanga. How does a sustained fuel shortage affect Zambia's GDP growth in the short term? And if possible, can you point out which components of GDP would be most affected?
Okay, thank you so much. I think the devil wanted to touch my throat. I was struggling speaking. Now I can speak myself. Okay, so the first thing is fuel is a basic factor that is being used in production, transportation, agriculture, manufacturing, and all sort of key economic sectors. So if we have a supply deficit, or we have got shortages that are being recorded, definitely that translates to some losses in the business pipeline. Even at personal level, it basically also plays out some disturbances. Obviously, you've got a plan that was made earlier on, then you don't have diesel, you can't go to a place you wanted to go. Definitely, whatever you could have been aiming to have in terms of income, aspect, will not be able to be attainable from that perspective. It's the same situation with the industry that are running on diesel. The genset won't be able to run, meaning there won't be any production. So a number of key factors will be able to interplay into that. But much more, the companies that deal with the agriculture, mining, and manufacturing, they are the most hit into this. They will be the hardest, sectors that will be able to be facing mostly challenging factors from that point, because they basically run their services, based on the energy as a key composition factor. Even when you look at the service industry, like for example, you run buses, or even just transporting people. So meaning, if you don't have diesel as a transporter, you won't be able to operate. The business comes to stand still. So it's something that comes in that regard, and it's something that basically also works out in a negative, because you see, instead of making a business turnaround, you do not make that. Meaning, some people stay at home. Even when it comes to, like, today's month end, you find it difficult even for you to pay workers, because you didn't make enough money. The volumes of your business could not meet your targets in terms of operation matrices, so it becomes a different situation altogether. Yes.
Okay. Now we know that this situation is not only Zambia that is facing this situation, and of course the Middle East war has affected almost the entire world. Let's talk about the likely medium-long-term growth consequences if the shortage persists for several months. Of course, sentiments are that hopefully the war can end, but just in case this persists, what are the long-term effects?
Okay, first I'll start with the global market. Obviously, the global market, from that perspective, it's facing a very challenging times. If we happen to even go up to $150 per barrel, that becomes a very, very devastating, factor into our growth projection across the global market. That would tell to say that the economy at global level may tend to go and find itself into recession, which is also going to cascade a similar pattern to Zambian economy. Meaning, when you look at even just the current situation of Middle East inflation, it's basically going to cascade across many regions. And when you just typically look at the aspect of the Strait of Hormuz, it has about 21% of crude oil that comes from that region, which get transported from there. Then, beside the energy aspect, we're talking of the commercial flight being disturbed as well. No one can actually fly around that place. Meaning, even when you've got investors meeting within or across the regions, it becomes relatively difficult for you to actually make up something like that. Maybe I may give a typical example, which is maybe more ideal to our Zambian situation. If President HH has got a meeting in China, he can't move because of that situation. So that is the magnitude of the oil situation regarding the Middle East. So now, when you look at also the other factor, Zambia is making progress on Zambian kwacha, having that buoyant performance, because copper is doing very well on the export side. So our export basket will also be tempered because some of the goods, including copper, passes through that Strait of Hormuz. So that already brings an aspect of also disturbance across many other commodities apart from the commodity of oil. So already we've seen that this basically cascades or has a very strong telling effect into the whole scenario of economic structure. Now, the key issue is that when you go deeper into the devastating event of what this oil price is bringing to the table, basically, when you look at it in the medium term, we are seeing inflation having a very strong resurgence, meaning we'll be able to see inflation now clocking back, going upward, away from the taxi or the policy corridor, meaning we'll be able now to start now chasing away, inflation. Meaning what will be able to happen in the case that instead of having a moderate and manageable interest rates, it will now start now working against our projection, against every productive sense of what we should be able to drive. At the point when we are even now gearing up into election, it becomes a difficult situation because the geopolitical risk, as well as the issues to do with election, they tend to be having some risk component together. If we do not do, for example, I'm just jumping here so to understand the whole magnitude of this effect. We are sitting now, right now, just know from today or from the time when we had this election, in January up to maybe somewhere like August, when we basically do the material function of election, then we'll be able to speak to say we have knocked out to this election as a risk factor. Right now, election is sitting as a risk factor to the growth projection. Then now the geopolitical aspect also has coming to complement. Meaning, when you look now, focusing on the fuel side, we are talking of inflation to be sustained. Already, what ERB is doing today would be inflation pricing, meaning we'll be able to see that the upward adjustment may able to trigger inflation. If the upward is coming with maybe 4 kwacha or 2 kwacha, definitely inflation is coming with 1.5% growth. Meaning we'll be able to reverse whatever we have done in inflation leadings. Meaning the past 2 months, even just maybe go into January, first 3 months, the kwacha has been getting a very good feeling around performing power in terms of buying, purchasing, structure and all that. But again, it also tells to say that if you are to build up the case, today ending, we had the reduction in fuel by 5%. So that 5% can make a reversal into this coming year. This coming month. Meaning, whatever we have done may make even erosion on the forex market. Forex market has been performing very well. Right from January, we had about 15%. February, we had about 4.5%. This month we're ending today, it has recorded about 4.6%. So the kwacha has been performing very well. But if we tend to flip the coin by increasing fuel costs, meaning the kwacha also will be able to start losing value going from this month. The only consolation here is that if we tend to have a good output from agriculture, we may be able to salvo, one, the effect of inflation in a way, which will not mean that we will not be able to have a huge jump. It will sustain a bit. Definitely, whether we like it or not, in a way, food inflation might not be able to jump that band as we can expect from here. But what we see in the medium term with regards to fuel will sustain for some time. And that's what you're going to expect. The only time that we can actually come to consolidate this, maybe after the effect of geopolitical tension. But as it is right now, it's standing on a very, very interesting component, which we need to monitor and observe quickly to see how best we can support this. And I believe when it comes to maybe sustaining this level of pricing structure, the government needs to come in, maybe way of subsidies at some point, because we cannot contain what may be able to come if this war actually is persisting. It will force physical indiscipline as well. Meaning, even when you look at the IMF template, might be able to be disturbed in a way. So it calls for, maybe I can now go spiritual. It calls for us now to start praying, saying, God, can you intervene into this Middle East? Or otherwise, it will lavish a number of good elements that we have actually been able to record so far.
All sectors are being affected in regarding to this issue. Let's get to the transport, trade, and supply chains. Fuel is central to transport and logistics. How will limited fuel supply affect domestic trade and cost of moving goods and market access for farmers and manufacturers?
Okay, so the template has already been set where diesel has not been sufficiently supplied. It tells you, maybe just from the look of things, if you are to even just drive on the Lusaka roads, you find at least now you cannot see congestion being so much. That's already a direct translation of what is basically, translating to shortages as well as supply deficit. So what we are seeing sitting very strong on the table when it comes to that, obviously we'll be able to see that the cost of production across the key sectors won't be able to meet up the demanding targets that they should be able to record. And that also eat into the GDP profile, where we'll be able to see that a number of good elements that we should have recorded based on solid consolidation that we have made, we'll be able to start now falling apart. And that also becomes a difficult situation for us to see how we can consolidate even in the midst of other standing factors. So definitely, the best answer there is that we'll be able to see a number of distortion in the market. The market structure won't be able to be as it has been projected. Even when you look at the global macroeconomic aspect, we are talking of reduction in growth projection. Maybe this coming month, as you read through economic news, the IMF is looking at trying to revise some of the projection across the many markets. And Zambia in particular is going also to be affected. Even when it comes to Ministry of Finance's projection, we are likely now to change the scales of our focus in terms of productive limit of target. And much to this also, we look at the budget itself, I think we've got a lot of good expenditure lines. We may be able to start allocating some of the resources from that basis, meaning we can now destructure the budget profile that we have so far made. And we are in the midst of also starting looking at next year's budget.
Yes.
Yeah, already we've got so many things that the budget is demanding beside that. So it's from that background as well. Yeah, I seem to have gone a bit way, but I'm just trying to stress the whole entire magnitude of the effect that we are facing. So fuel, as I mentioned, being a basic factor into this, it's basically touches all areas of concern. Even you learning this consistent power that we are able to see here, it's because some gensets that ZESCO uses are using fuel. So imagine if you start getting to be in scarcity, meaning we'll be able now to see that power won't be able to be steady, and a lot of other key factors will get disturbed from there. So it has got a very strong ripple effect across the many sectors of the economy.
Yes. Indeed. And of course, you have mentioned that in regarding to such situations, this is when the government should come in terms of subsidies or emergency imports. But how should monetary authorities respond? Is there a risk that efforts to stabilize the kwacha or fight inflation could worsen growth?
Okay, so the biggest factor here is obvious. We know that what is making the kwacha to perform this good performance. So upholding steady attention on the mining sector is an important aspiration that need to be strongly anchored there. Then in terms of just looking at energy in whole, I think we need also to start looking at single sourcing of some sort with the certain organizations, like of course looking at Dangote to be one of the key fundamental player into this through the Namibia routes. That can also help beside the other single sourcing, in the sense of maybe government trying to strengthen that discussion. but of course not single sourcing in the sense of getting the oil. So there must be a plan B, which should be a very strong single source from that point. But again, also what we need to do is to also open up other market areas, especially when it comes to seeing that Angola comes to save Zambia in a sense. And what we should also be able to see that we need to do area procurement of the commodity, because what has caused in the case that most of the sectors or sector players were basically on the wait and see, not until we see this situation now coming to some sort of worse scenario. So I think we need also to look at where we can also maybe create risk management factors in regarding the commodity, because fuel, the good part that it goes through all the sectors. Yeah, it cannot just it's like I don't know if you allow me to say this. It's like what we say oxygen is to everyone. Be it a white person who need that same oxygen. So that's the same thing with the fuel. Fuel goes to almost all the sectors of the economy. Yeah, so the way I've mentioned about oxygen, it goes to a Chinese, goes to a white, goes to an Australian, it goes to anyone. So it's the same thing with fuel. Fuel actually has got that part. So we need to ensure that we have a best way we can work with some sense of stability in terms of security of supply.
Okay. Yeah. In case you're just tuning into Capital FM, this is the mid-morning report. My guest this morning is economist Kelvin Chisanga. Our topic of discussion is the fuel situation in the country. How is it going to affect, or the impact of the fuel situation on the Zambian economy? The phone lines are open in case you do have your questions or contributions to the program. The numbers are 0733-792-475 or use 0761-997-997. Either of those lines will get you through to us this morning. And of course, let's get to hear your questions or contributions to today's conversation. Now, of course, Mr. Sanga, you're mentioning on how, fuel affects all sectors, of society. It's like oxygen. Let's bring it to social and poverty impacts. How will vulnerable households be affected? Could the fuel shortage increase poverty or push more people into food insecurity?
Definitely. That is the way things will work out in this case, where the strong telling effect to be able to cast shadow across. And again, also my statement here is that it even pushes the scale of poverty much higher compared to maybe the moderate that we have actually been able to see with interventions that are taking place there. So fuel has a very strong transmission mechanism. It's basically just come direct there. So it will be basically, be shown light there and then. And it gives also a deep sense of, a way we can actually be able to take things from that point. So it's basically just as a different way it can shape. As I mentioned, fuel is just in the middle of everything that we do. So if it goes to a poor person, I'm sure the scales of poverty will go much deeper. Yeah.
Okay, and you mentioning that, are there particular demographic, groups in terms of, the effect or the impact on how this will affect, people, be it the urban people, urban poor, rural farmers, informal sectors workers, or who will suffer mostly in regarding to this?
Well, the magnitude of effect, I think it goes deeper close. Obviously, we cannot say you will suffer more and all that. The same way that you will feel, in terms of how certain things work out. It's the same thing that everyone across will be able to feel. Much more with those that are learning production. The farmers, maybe just to give you a typical understanding here, that the farmers burn most of the fuels during the planting season. Then harvest time also they will be able to. So in between, I think they are okay. But again, with the aspect of other comparable cases that they should be able to work out, I think it also comes much deeper from that point as well. So it's something that I would say as a wider spread in terms of effect. Yes.
Okay. Now, does this crisis change the calculus for Zambia's energy policy? For example, accelerating investment in domestic refining, storage, biofuels, or electrification of transport?
You see, the biggest factor is that you cannot lash into other diversified strategies when you are in a crisis. So it becomes even much more deeper to see it from a different angle. It means we have first to contend with the short-term shortage that we are experiencing, meaning our way of seeing things should be able to first mitigate, make money or make a business turn around, then we look at other options. So it's the same thing with the policy makers. They can now lash into some indiscipline of some sort because they want to cushion. Because already, I'll tell you one thing: the fuel crisis, it's politically inclined as well. It also borders on how the people look at it from the political lens, meaning bafirwa. So how do the politicians do? They want to now deeper into government purse. If it means getting the money for some big thing that we could have done in the next few months, they want to say, no, let's forgo for this because we have to use a basis of opportunity cost in this matter because we need to sort out the problem of the fuel. When you look at it in the different way, Zambian government used to subsidize fuel. Of course, even up to this moment, they still subsidize on the people. They think that subsidy is only just a way of going with public resource, like cash or finance and all that. They are subsidizing using policy instruments, suspending maybe the import duty, or they do some other means within the taxi structure. So in the case where I'm talking about subsidies at that high level, which maybe I will give a proper difference here. 2021, our expenditure was supposed to be 90 billion Zambian kwacha. But because we subsidized so much with fuel, we went to 120 billion Zambian kwacha, or with an overlap of about 25%. So now what basically played out here is that we could not service the debts that we had. We are supporting our people. But the people that we are supporting, they are not matching the productive output that we should have seen giving birth to extra monies or good tax revenue for us to start servicing the debts. So that also was kind of a very difficult situation from that basis. So it's the same thing with what could have happened also with the context of subsidizing fuel. You are not going to subsidize the lower person on the far-end consumer basket. What will happen in the case now is that the middle and up mwamba, they will be one that will be able to benefit from there because they are the ones who've got cars. They are the ones who've got a number of needs for fuel, including genset. But when you look at it in the way, yes, 1-2 people might be able to stay home without using the bus today or for 2 to 3 days, which in any case is not something that's going to work out in the best interest. That's the more reason why, for me, if you look at it in a way that subsidy now has come, where it's going now into education, it's going to health, I think that's a timing because it's able to take somebody from Shangombo into school, Nabuwaria into school. It's coming to the bottom line target. When it comes to the aspect of fuel, it becomes a bit more sensitive because it's something that also works with a political lens, as I mentioned, where politician has to see that fuel comes down. This is a main issue that has got a pass-through effect across many activities that we do on business and the investment side.
Okay. Now, there are trade-offs between subsidizing fuel to protect consumers and allowing market prices to adjust. What would you recommend and why?
It can be a both scenario, especially in times when we are facing uncontrollable factors. We need some means of substance in a way, which should be short-term intervention, and it should be timely. Especially at a point when we do not know where we're going with regards to the geopolitical tensions that we have. The biggest factor here that we are sitting with a number of uncertainties, especially when it comes to oil. We don't know if at all the agreement that war has come to an end is something that is sentimentally standing, or it's just a way of massaging the market. So if we seem to have some moderate effect around supply, especially when there is even a reopening of the Strait of Hormuz, then we are sure of what's going to happen. Then in terms of the trading off around market demand factors or cost-reflective pricing model, it is something that is also important because we do not need to go back into debt defaults as a country, and also we don't want also to make it very difficult for the market player to interplay into this aspect. What we have right now is also something that has got also a number of challenging factors. When we look at the market forces, we have got some of the things that are unethical, which are being practiced by the market players, our marketing players in the market in particular. Some of them, of course, the president made a sound statement around hoarding fuel, which in any case might also be a current prevailing situation, despite whatever it is in the case. But what I should be able to tell you that even intervention to do with the 5 million liters, which has been dispersed from Ndola, it's not sufficient enough. Zambia's consumption level in terms of just one commodity, diesel, is about 4.5 million liters per day. So if we have a situation where we are consuming that, then it tells you to say our current storage capacity of 20 million liters, 20 days storage holding, is not enough for us to see this economy thrive. We need to look at 90-day storage facility. Of course, we embarked on a very ambitious plan to work on the plant in Mansa, Chipata, Mpika, and Rusaka in terms of just having a storage. But the storage itself has not been enough. So maybe what government should now be able to do is to invite players to start now interplaying into the storage facilities. On the side of the lighter side of energy capacity system has worked out very well because the energy reforms have opened up a number of things, which include even the electricity side of sector. So it's important that we need also to look at how best can we gravitate more energy efforts around storage capacity. There be government intervention through the triple P model in terms of trying to anchor this as a sustainable means as well. If we can work on the facility resources, I think we'll be able now to have a more predictable environment. And in fact, even when it comes to the overall economic performance, I think we should be able to record some positive development from that perspective. So it's storage issue. I'm saying this because just 2 weeks ago, the Minister of Energy, said we've got 60 days of import or operation cover of diesel. But it has worked contrary to that statement, which means it's actually issue of storage because the licenses that they are issuing now through ELRB, which is now taking about 48 hours for you to have it, they are basically also taking account of a transit commodity to be part of the storage. Meaning if you, home by your interplay into this business, you've got trucks, maybe 4 or 5 trucks, they are coming from Tanzania or wherever they're coming with oil. You are also being recorded to say you've got oil of so much, which hasn't even reached at the point. So that is a serious misnomer when it comes to this industry. What we should be able to do is to start talking of the current stationed stock holding. They need to sound more compared to what we have actually been able to see. Then also we're seeing the challenges that are coming with the exchange market dynamics. Whenever there is also a need for fuel shipment, we are also facing challenges of that nature as well. So the intervention should not just come with the fuel as a blanket cover. We need also to look at logistical means of what is taking place from there, which includes insurance cost as well. and many other logistical factors.
Okay. The numbers are 0773-792-475. Use 0773-792-475, or you can use 0761-997-997. My guest in the studio is Kelvin Chisanga, who is an economist, and this morning we're just tackling the issue of the fuel situation and how it will impact the Zambian economy. You did mention on how the fuel situation is also inclined to the political atmosphere. Now, how might political pressures shape policy choices, and what risks do populist short-term fixes pose to economic stability?
Okay, so maybe the best to do is to look at where we are coming from. Zambia's economy was choked. It could not fire up to the fullest scale because of so many effects that were accompanied, especially when you look at the issues to do with the sovereign debt. As a country, we were in default. We had that default risk factor, which could not even give what we are even seeing in today's situation, where, of course, the IMF came in, incentivized a number of key factors, made policy reforms, did a number of things, even including reshaping the fuel supply chain in the country. And much to this also, our fuel liabilities were almost close to about $1 billion, which we have managed to now reduce from there. Then when you look at also into maybe ZESCO's liability as well, on the other side of the energy, it had about $1.5 billion as well. So through reforms and many other, it even tells you that this is a template of a populist situation when it comes to politically driven factors. And again, the key factor here is that when you touch on the sovereign-led aspect, you're basically closing your doors for more investment inflows and more to do with even the aspect to do with the microeconomic variables like inflation, exchange market, and many others cannot be able to perform in a better way if things are working out like that. So when you touch fuel, push it into the ability by way of going on your high drive of expenditure to please the voters or population out there, it risks now the aspect of credibility on your projects. Instead of you doing the proper projects like on the roadside, you do a road that can only take 2-3 years, it get damaged. If you basically play out the aspect of fuel or energy in totality in a perfect order, in terms of working out key fundamentals that are required to sustain it and to run the economy the way it's supposed to run, it will be basically also helpful on your side to make sure that you are running governance in all equal measure, meaning you are taking on the governance policy, you are taking on the market dynamics and conditions, you're also taking on the consumer side of demand. So this, in essence, what I should be able to put across is that when you drive high on your expenditure column, definitely it will show. Once it shows on your government deficits, on your budget deficit, it also goes into now the aspect of debt issues where you now start failing to pay. It goes now into credit rating where investors will say, oh, it's highly indebted, we can't go into that market. Then, if you want to appease to maybe first learn some of the things, you go now on the tax rebates. Instead of you working with the normal market regional tax appeal, you start now giving holidays on taxes and all those things. So that's basically what will be able to happen. And it gives a very different shape altogether in terms of growth patterns. Yeah.
Okay. Tax holiday is something that I know you want to touch on this morning, but just before we get to that, what contingency plans should businesses and local governments put in place to manage the ongoing or future fuel disruptions?
We need to have a proper market behavior, especially when it comes to the usage. I don't believe working for a company will misuse fuel anyhow. There must be some special containment measures that need to be put in place, even from the personal level. If it's a company, obviously, it's important to also master the patterns of performance in terms of fuel cost centers. When you spend 15,000 kwacha this month, next month you are spending maybe a less more or a bit more. It tells you to say that you need to safeguard this, expenditure behavior of some sort. So when you also look at it from the government point of view, I think it's important to look at how best can we create an atmosphere which also should be stimulating interest so that we can have more players into the market. Obviously, that policy moderation will be able to also get a bit more participant to make it more competitive. Single sourcing, yes, it has also actually been a biggest thing in the case where we have seen that with regard to Tanzania, corridor, we have used it to the fullest capacity. I think we are talking about 75% to 80% using Tanzania. We need to also integrate other, transit points. We've got Bela, it's doing something like 20% or 25%. I think we need also to look at in Angola. Some are also, we need to go into oil exploration. This country has got some oil. Yeah, that's one thing that I tell you to liberate from there, to say, look, let's also look at the oil blocks that were earmarked in the country. Just as you can see it from Angola. Angola, we've got some spot line in Western province there, that side. We need to see how best we can explore. The same way we have put energy on the mining to investigate what type of minerals substances we have across the country by way of going with high resolutions. It can also be the same with oil. That can be a longer term measure that we can also be able to dive into. Yeah.
Okay. Now, how should the government communicate and sequence interventions to avoid panic and minimize economic damage? Of course, ERB has already sent a message to the citizens out there not to panic and, of course, not to buy in bulk. The head of state has said investigations should be done in regarding to this issue. But how transparent should government be to its citizens in regarding to this issue?
Okay, so open access has been one of the triggering point which has acted as a fulcrum to all this scenario in terms of seeing the transparency. Obviously, the market players are very much aware of what plays out, even with the public facilities like Ndeni or Tanzama, and much more with the aspect of what basically is playing out around the oil fuel scenario. I think weekly or monthly update have also been able to give that confidence in the market. Okay. Much to this also, I think it's important to look at the best way we can be sensitive information to be guarded very well. I'll be very honest with you, it's not like I'm attacking anyone. The moment the president mentioned about hoarding fuel, the players started hoarding. So some of the things we don't even speak in the market, they're quite sensitive in a way. So there must be messages that can be able to work in a best way. And even you, the media, when you get that to say do not hoard fuel, definitely you're sending the signal. So there must be a way we can just spray as if things are just normal. Yeah, so communication is very important, very key factor into this as well.
Okay. Yes. Now, as we are about to to close, something that you wanted to touch on this morning is in regarding to Zambia's tax holiday. Now, to a layman who might not understand what Zambia's tax holiday is all about, kindly just explain what this is all about, and of course, how important this is to Zambia and certain concerns that did come out in regarding to this issue.
Okay, so Zambia sits, before I explain the concept and mechanism of tax holiday, Zambia sits in a place where we basically need to attract more investors. We are at a point where we are linked to what we are calling African Continental Free Trade Area, trying to make a single market with many other African countries. If we do not move at a faster rate, we may risk remaining behind the silent war in terms of agriculture, in terms of mining, in terms of everything, inclusive now the aspect of validation, which we have actually been able to push. So what is basically playing out is that we need to find a way we can remain competitive across the market. We may think maybe in the way that maybe Zimbabwe, Malawi, Mozambique have actually been able to work out structures around taxes. Their taxes, maybe they are inviting more to interplay with the investors that know that if our tax band or tax structure have not been able to gravitate energies of foreign-based investors to come, or FDI in short, it becomes relatively difficult for us even to see employment rate or an employment rate to jump into employable situation. So at a point where Zambia is building free education, what this entails is that we are building up a future productive society, which will be able to interplay into different factors around business, science and technology and all those things. And it even goes further to actually get the validation aspect, which we have actually been advocating for. So now, with the aspect of tax holiday, you basically lower your tax outline. For example, if your tax was about 10% in a certain industry, you maybe come to 5%, so that a player in the industry can come across the market, can come and start doing something productive, investment of some sort, which in any case may, one, get employable situation to lower, meaning we'll be having people getting to be employed there. They will create jobs in short. Then beside the jobs, we'll also be able to push in the regional market to have that aspect of export competitiveness. So once we create that situation, it becomes more easier even to work on the Quachas effect and many other aspects. I don't know if you are able to give me time to explain a bit here. So when we get to have an investor who actually comes to enjoy tax holidays or tax incentives, they quickly learn their businesses and all those things. They will be able to now get, maybe for example, in the case of MFAs, we're talking about 20,000 employees there. Once they have money, they get paid, they are basically going to feed more family members from there. We are talking of also them having a bit of disposable income from that perspective. The other broader concept here is that the company which is enjoying that tax will basically do more industrial activities as Zambia, where Zambia now start boasting to say, this is a Zambian product. That sentimental feeling, where you are in South Africa, you see a Zambian product, it's because of this. Then what will happen in the case is that Zambia will start now having a recommendable number of export products, which means when you are plugging yourselves into African Free Continental Trade Area or COMESA, SADC, whichever regional bloc we may be thinking of, we are basically now reducing the number of imports. You can only create employment when you go into validation, especially with the case of Zambia, where we've got resources that are at rampant. Once we do that, it implies to say that we'll basically create more jobs than the way we actually being able to see where raw materials have actually been offloaded most of the times. And the aspect of exporting raw materials basically creates jobs out there. When you import the product that were made of Zambia's raw materials, it means you are importing now the aspect of poverty. I don't know if you're getting my point. So when we export raw materials, in short, we are exporting jobs. When we import, we're importing poverty. Yes.
Okay.
Yeah.
Now, I am aware that the Zambia Development Agency offers a 10-year tax holiday to eligible voters, investors rather.
Sure.
Is this too much? Should it be reduced, or it's just okay for now?
Okay, looking at where we are, we've I like being practical. I just hope my listeners also are able to listen this clearly. Zambia had teething problems with the mining sector. We were not able to do substantially very well in terms of even just starting on key fundamentals. That's the reason why we saw inflation going to 24%. We saw the exchange market also was not stabilizing, losing about 49% at some point. A lot of things were just in a very disturbed situation. So now, after working out framework for the mine with the policy consistency, we have leveraged the environment for growth. So we have done that with an essence of trying to stabilize raw materials and all that. So on the raw material perspective operation, we are good. We are doing the best job. But now we need to drive industrialization. And it's like a typical example I can give is I don't know if it's an awkward situation, I can explain this. If somebody is proposing a woman, definitely they will be able to pumping a bit of impia here and there, showing okay. Later on, it stabilizes. Obviously, there will be understanding. A woman will understand. He doesn't have, and things will work out like that. So it's the same thing with what we're trying to do. We want to
attract
an investor to come, and on conditions to say once that investor starts benefiting 10% of tax, whatever, we'll be able to ramp up industrial activities in the country. That's a P1. P1 is come and start manufacturing. Your job is to manufacture and also export. These two strong things. Export, manufacture. Then 3, support our local SME. He is not paying tax, but our local SME will pay in a way, because what will happen, this investor should not source those items elsewhere. It's through our SME. Our SME, they are given, of course, not tax from that basis, but they are given a guaranteed market. I don't know if you're getting that. Then, on top of that, we've got now our Zambian people working there. So these are the things that I've actually been able to put. Then, they have given this investor to say, it's not 10 years. That's the reason why I was saying we've got a problem with the media coverage in some of these policy sensitivities. It's 5 years of no tax, 0 tax on imports of machinery and raw materials to make, 0 tax or 0 no duty paid on that for 5 years. If you are a shareholder in that company, you are entitled for dividends. Your dividend won't be taxed for 5 years. I don't know if you're following as well. Then on the corporate tax, you won't pay as well for 5 years. So it's only these 3 for 5 years. When you shift into 6th year, going toward 10th, you start paying 50% of what you should have been paying as a normal tax. So that is the model which is there.
Okay, thank you for that clarity.
Yeah.
As we come to the end of our discussion this morning, which has been very enlightful, Mr. Chisanga, a big thank you for making time and just coming through. Your message, your word of encouragement to the people of Zambia. What should we brace ourselves for harder times in regarding to, of course, what is currently happening in the country, and of course, just your sentiments to the government as well.
Okay, I think the best advice is that I know fuel is going to be increased. We should not panic. We should also not look at it politically, because you see, the key issue that fuel is got a direct transmission. The moment we see fuel going upward, maybe by 2 quarter, 3 quarter by this midnight, definitely we'll have a stable supply. Which will be able to speak into that. On the side of whatever I've spoken, that's an inflation, but we can look at it in a positive way. It's better to have supplied product with that sense of good condition compared to what we are seeing, because you see, somebody is telling you to say, Kablongo coil, or Kablonga, there is nothing. But if you've got 2 kwacha on top of what we used to spend, I think it doesn't do any harm. Maybe the only thing that we need to do is to double the size of our effort, making sure that we have more money to make things from there. As I mentioned, you go on the road right now. There are no vehicles. There are few vehicles. That tells you a story. It's a very strong signal to say that this thing, if it were to take even 1 week more, I think it would be quite devastating. I would rather maybe have my hand swollen. I'm not working, but I'm working at home. I've got also fuel I can move here and there, than not having fuel and I'm in health. Yeah, so I think it's important to also look at the better devil when it comes to this scenario. Then on the government side, it's important that they should also look at a best way in which they should be able to safeguard key factors: inflation issues, fuel reserves. We need to build now fuel reserves. Looking at the template that we experienced earlier on with the Ukraine and Russia, already that's a very clear, review that we can make from there. Meaning, what we need to do going in the future is to build proper, durable factors that can work around fuel reserves. Then, in terms of policy, I think if it so happens that the situation goes like this, there's no harm to go into extra expenditure. Yeah, just to serve effects. Otherwise, it will distort the market. The platform of stabilization that we have so far made is quite stronger. If we disturb with any iota of fuel shortages, especially if we extend it to even to petrol. I know petrol has got a small fraction of about 1.8 to maybe about 2.5 million liters per day in terms of usage. And mostly we don't use it for the industrial processes. We use it for mobility. But for diesel, it's what runs this economy. So there must be a way we can actually assure people out there, especially when it comes to governance point of view. Time to time, a communication channel through ELRB, Minister of Energy. I think it's important to actually look at that critically. Then in terms of just the overall scenario, I think this should not be an issue that we can even be sitting to talk. It shows also the quality of leadership that we need to see, especially at a time when you're in election time. We need to work this out. The energy issue in all entirety of it should not be a case that we can be talking for 3 years. Now, regarding the monthly review cost factors, I think, yes, I understand that we have been facing a challenge for some time, for the past 3 years now, where Zambia went on a model of cost plus, factors, or cost reflective model. It's important to look at how best can we create enough space of focus. This has not given a good shape to the economy. It has caused more misnomer. You cannot predict what will happen next month because of fuel not being able to be stabilizing from there. So lastly, what I should be able to say is that it's important also to look at the template and factors around biofuel, ethanol, and many others. There are opportunities that we need to explore at full scale. So there's a need for us to drive policies. In fact, policies has actually been, put in place around biofuel. It's just a lack of implementation. So the central government has got mandate to actually look at this, especially the Minister of Energy. It should not be seen to be failing when things are working out on the other side. And it's too far long to see that energy is not stabilizing the market. Despite even working on energy balance, where we are talking of diversification from electricity side of things, we also need to look at how best can we tap deeper on the procurement on the fuel. If the worst comes to the worst, I think for me, I would really suggest that government should now take keen interest and participate in fuel aspect at some point if the worst comes to worst. Expect a worst scenario case if this war does not finish any time. Government to government, it's important also to work it out from there with many other partners across the market. Yeah, thank you.
Thank you so much, Mr. Chisanga, for making time this morning.
My pleasure.
That was my guest this morning, Kelvin Chisanga, who is an economist. We were tackling the issue of the impact of the fuel situation on Zambia's economy. It's been a pleasure being here with you. This is the Mid-Morning Report right here on Capital FM at 99.9.